Okay, good morning. Live with my little guy Ollie here today. Hopefully he's gonna behave. Um, so I'm out in Kelowna, and I wasn't sure what I was going to talk about this week on the podcast, but um, I subscribe to a few different people that I respect, and one of the things that I read in a recent newsletter was this concept of um, doing one wrong thing can destroy 100 right things. And so I'm looking over here every once in a while because I've got my notes here, and once in a while, hey Ollie. Um, and when I read that, I thought to myself, that is very true, and I'll tell you why I think it's true. Number one, when I look back at some of the biggest mistakes I've made, my parents, the people that I've been fortunate enough to learn from, they do what seems like almost everything right. And then when it comes right down to, one decision, oh, you can, okay, see, bud, they end up potentially losing everything that they've saved up and worked so hard for. So, for example, with my parents, if you haven't heard the story, I mean, they saved both teachers, paid off their house, and they were given an opportunity to invest in what seemed like a very kind of lucrative investment opportunity, and they lost it. So you think of 10 years, 15 years, however long it took them to save up that money. They didn't refinance the entire amount for their house, but in excess of $100,000. Um, that one decision, 100 things right, one thing wrong, and it sets you back. I know on a more personal level, as it relates to fitness, I never thought about this, but when the gentleman used this as the example, he said, you can eat right the whole week, and then you can go out on a bender, or you can eat crappy food and pizza, and that one night can set you back further. So it's like one step forward, two steps back. And I think that there's a lot of circumstances like that where I hadn't considered it before, and now that I'm aware of it, I wanted to share this with you. Um, Certainly, I know of a situation where a very successful real estate investor got into a development opportunity, and it started off like all developments and investments. It starts off like a great idea. You know what, this is going to be incredible, we're all going to make lots of money. And over time, he had to keep feeding it. He had to keep putting more and more money into the deal, to the point that what happens, and I've seen this with others, and I know even for myself, that it's almost like you're chasing a bad deal because you have so much invested that you can't imagine the deal not working out. But you essentially start to ignore ration, and if you were to have an outside perspective looking in saying, you know what, John, this is a ridiculous, I'm just saying John as an example, John, this is a ridiculous investment opportunity. Like, what the hell are you doing? You gotta step away. You've gotta, you know, you've lost your money. It's time to just call it a day. But when you're in the deal and you convince yourself you're 3 months away, you're 2 months away, you're just 6 months away, and you continue to put more good money after bad. And the number of times that I've seen people go down that road, and what ends up happening is they, it's usually the second person that comes in because they'll lose it in a foreclosure. And the second person that comes in and picks it up for 20 or 30 cents on the dollar, they're the ones that make money. And so part of why I'm sharing this story is I've had some clients come to me and asking me about developments because they see me doing developments and they think, okay, well, this is a good thing to get into. And for some clients, it is, right? If they have good experience and they have a track record and they've done it before, then and you have a team around you that can support you, because that's one of the things that I'm always harping on is this isn't just about you. This is going to be about everybody that's involved in your team to support and help you. And so uh, I don't want a real estate investor that's done 100 things right to get into one development and potentially lose it, um, because it's going to take you 5, 10, 15 years to bounce back from that. And the number of successful real estate developers that I know that, and sometimes it's just market timing, right? You start the development off where everything lines up in your development, but you're building into a 2 or 3 year horizon, and I don't know there I don't know too many people that can predict what's going to happen in 2 years. So just understanding and knowing that, um, you can start to evaluate the level of risk that you're getting into as it relates to getting into a development. Um, I'm not sure if there's a lot more that I want to necessarily talk about as it relates to that. I just think that a few things, I suppose. I'll just kind of recap. So, doing one thing wrong after you've done 100 things right, I think if you kind of keep that principle in the back of your mind, I think it'd be very helpful. Number two is surrounding yourself with someone. It doesn't need to be a coach, it could be just someone that you highly respect, that is impartial to the types of decisions that you're making, because they'll be able to give you honest feedback as to whether or not um, the type of investment. I'm obviously talking about investments, but this can apply to a lot of different areas of your life. I mean, I've got counsel as it relates to health, family, um, not so much on the friend side, but some of my friends will call me out if they feel the need to, and certainly on business and real estate investing, because often we get too close and we will think about all the wonderful things and great things that are going to happen when we do this deal. But the challenge is we're, there's a reason they're called blind spots, is because we don't see them and we don't know what we don't know. And certainly as it relates to investing in a development, for example, if you've never done a development, no amount of Udemy courses, UBC, CCIM, I mean, you don't become a developer in a classroom. You've got to be on site. And, I've been very fortunate because I've got family that are developers. I worked in construction. Whatever I could do to get around it, I wanted to just be fully immersed. And I didn't start doing $20 million developments. I'm still not doing $20 million developments, although one that we're looking at right now could kind of approach that. Um, you start small, because you just inevitably you're going to learn something along the way. And if the deal is smaller, and the risks obviously are going to be much smaller. I see some people, they kind of jump in with both feet, and you know if they do well, that's excellent. I think I did a video on this recently where success is a horrible teacher, right? So just because you've had a success, that doesn't mean that you're um, that you did everything right. Quite frankly, a rising tide lifts all ships, right? I mean, I think Warren Buffett talks about that as it relates to investing. So if you're in a hot market, you can make a lot of mistakes and screw up and still make money, but that doesn't necessarily mean that you have the right approach. And unfortunately, what that sometimes gives investors a sense of success, when in fact they it was really the market. And I know that personally because that was my story for probably the first 3 to 4 years. I really didn't know what I was doing as a real estate investor. I just took massive action. I was 24 years old and I was in an up market. Well, as soon as that market changed, I learned some very expensive and important lessons. And there was no such thing as a fast, easy money. Maybe in an up market, but you end up giving it all back and then some. So just kind of um, want to share some of those kind of experiences, and hopefully you can avoid any of the mistakes that I see a lot of real estate investors making, myself included, at least in the past. Because, like I said, you can do 100 things right, but if you do one big wrong thing, it can kind of erase all of the previous work that you've done. So that's it for now. I got to get back. You can see beautiful day here in Kelowna. I'm probably going to no run today. It's my day off, but I'm going to go golfing and probably hit the weights, but nothing too crazy because I want to beat my brother-in-law and father-in-law today. Bye for now.